We had a nice up day on Friday. We see everything from gold to both the stock ETFs that we review, the S&P 500, the Nasdaq 100, and bonds up for the day. Look at how beautiful our weekly vertical crossover is, still going up like stair steps. It's the magic and the power of that weekly vertical crossover. Derivative oscillator still gaining upward momentum. Price percent oscillator still heading up on the S&P 500. We go to the 2-day chart, and again, we see things getting, again, a little weaker as time moves along, but still moving up. Price is still above the 2-day trend line, well above the weekly trend line. The derivative oscillator is about flat. Price percent oscillator still heading up, so pay close attention to the 2-day candle as we look at where the prior candle topped out at 278.92. We see that price was at 279.36. So again, continuing to move up, maybe a little bit of slowing, so continue to pay close attention to that. We hone into the 4-hour chart, and of course, we still don't have a crossover. We had basically a day of down movement on Thursday, up movement on Friday, but not enough to pull that price percent oscillator over. Derivative oscillator continuing to lose momentum. So again, watch things as they go into the week. Remember, once you make that decision to jump in, as those of you who did this practice trade did back on Friday, or actually, well, could have been Friday, probably more like Monday, things moved up, then slid sideways and popped up again. And once you jump in on that 4-hour chart, that's when you start looking back at your 2-day and your weekly to really see if those trends are weakening. You don't want to be held to that 4-hour chart alone, because we can see it goes up, goes down, goes up, goes down. But it's the larger charts that really help guide you. That's why you need to practice with us every day. You need to follow these charts each and every day, and you need to do practice trade after practice trade after practice trade. If you want to get good, that's the only way you're going to get good. And practice trades are not real money trades. If you jump into this thinking, I'm going to do a lot of real money trades, you're not going to have a lot of money after a while. That's why we talk about practicing, printing out those daily market worksheets, weekly market worksheets, those trade worksheets in particular. And in fact, I'm going to put all 3 of those trainings at the end of the video today, links to those, so that you can learn how to fill out those worksheets. They're all available for free in the show notes. If you've not subscribed to chartingwealth.com, go there and do it. It's just that simple. We would love to have you on our email list. You will not be mailed any junk. You will get every day the daily market review. And of course, on Fridays at the close of the market, we prepare the comprehensive review and forecast for you. So we go from the S&P 500 to the Nasdaq 100, QQQ, my favorite chart. What do we see going on there? Well, derivative oscillator is continuing to gain momentum. Price percent oscillator heading up quite nicely. We look at the weekly chart. Things are going along swimmingly. Again, topped out in the prior week at 172.56. We look at where we topped out this week, 173.08. So things moved up nicely. We go from the weekly to the 2-day. And again, we see over the course of the last 3 2-day candles that sideways slide, which concerns us. We see the derivative oscillator is losing momentum. That price percent oscillator is getting flatter as time goes along. So pay close attention to that 2-day chart as we go into this next week. We look at the 4-hour chart, and of course, it's still in a confirmed down move. We did have up movement at the end of the day on Thursday, and we had up movement both in the morning and the afternoon on Friday. Derivative oscillator lost some downward momentum, but that price percent oscillator still rolled over, going down. Price is above that 2-day trend line, which is good. Keep your eye on the prize. Again, watching those bigger charts, and at the same time, that 4-hour chart. And remember, as we teach all the charts all the time, if you don't have our book, I sure would love you to buy it. You can find a link to how to purchase it in the show notes. It's a way you can support the channel along with your Patreon support. Lots of great gifts that we give out to our Patreon supporters. a once-a-month phone call, a Q&A session that we have. We also help you review the stocks that you're interested in. We pick several of those to review every month. Be happy to do that with you also. So go check out the Patreon link. Also, you also get all sorts of great training, short chart training, Bitcoin training, and our training on the quarterly chart and those reviews, which is fascinating. So we're going to head from the Nasdaq 100, leaving stocks, going into bonds, and we see that the week ended up on bonds. Now we do have sort of a green spinning top. There's some indecision there because that down wick. But again, it is a green open box. You can see that the price percent oscillator has gone about flat. Derivative oscillator losing momentum. Price is still above that weekly trend line, which is good and important. We look at the 2-day chart. It's never been able to get enough momentum to cross over. Its latest 2-day candle is a down candle, little bitty wick on top, mostly on the bottom. And of course, we're seeing the derivative oscillator flip over to negative. So we don't have any trade on TLT because the weekly's up, the 2-day is down. That means you don't have a trade. You have to have both things going in the same direction. 4-hour chart's also down on Thursday, up on Friday, but overall the price percent oscillator is negative and is the derivative oscillator waiting for bonds to shake out. Remember, bonds are typically a safe haven when stocks aren't doing well. But when stocks are doing well, like they have been, money doesn't tend to flow into bonds. And just with supply and demand, you don't have those kind of upward pressures on bond prices. Now, let's go to gold. Gold, however, up nicely for the week. Nice big up candle. Ended the week on an up note, 0.36% on Friday. Derivative oscillators continuing to lose upward momentum, but that price percent oscillator is heading up. Price movement is well above the weekly trend line on the weekly chart. Remember, gold crossed over back on the 5th of October, going up. If you traded just on that weekly chart, if you just use it as a master chart, been quite beautiful, hasn't it? Jumping in point somewhere around the 111 to 115 mark, reached as high as 127.21 since October. Not bad. If you're interested in knowing what gold does, why don't you just follow our weekly chart? You'll do quite well. You can look back and see how long that has been accurate. Now, again, we're not a stock calling service. We're an education firm. Once you study and train with us, once you get good at your practice trades, and all the other information you've learned over the years, you can make up your mind what to do with your own money. You don't pay us to give you advice on what to do with it. We're just here for training. Now, let's jump into the 2-day chart. We see this latest 2-day chart after a big bump up on the 2-day candle back on the one that ended the 20th, Wednesday the 20th. Thursday and Friday, red spinning top means indecision, tending down. However, the 2-day chart's still positive, and we see the derivative oscillator is positive. We go to that 4-hour chart, and we're in a confirmed pullback, which is, of course, what we were waiting for. We didn't have a jumping in point because things were just flying up. Last thing you want to do is buy at the height and then watch it crash. We're going to let it go down, see if it'll cross over before that 2-day chart crosses over going down. If that 4-hour chart will cross over going up, then we'll have a potential jumping in point. So just keep your eye on gold as we jump into this next week. Folks, that's where we are as we end the day on Friday in this week. Bring you this comprehensive review and forecast. Again, if you like what we do, you need to follow us every single day. 10 minutes is all we ask, and we got lots of great stuff for you at the chartingwealth.com website. And again, if you want to support us, buy our book. We're in our 8th printing, getting ready to go into the 9th printing, and of course, be a Patreon supporter. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.